This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Friday, June 6, 2008. Well, the dollar didn't stand a chance today after employment figures crossed the wires. While we only lost as many jobs as expected for the month of May, the unemployment rate jumped by a half point to 5.5%. This is the biggest monthly increase we have seen since 1986. Needless to say, neither the dollar nor stocks responded well to the news. Most major currencies gained at least 100 points on the buck, and the Dow fell more than 300 points. Climbing crude prices were only adding pressures to the downside as oil broke to new record highs near $140 a barrel this afternoon. Gold was also up sharply, around $900 an ounce. Overall, this was a recipe for disaster as far as the greenback is concerned. Ironically, the one currency that failed to gain on the buck was the Canadian dollar. Given the rise in oil and Canada's employment figures, traders may have expected a better reaction. However, we mustn't forget how dependent the Canadian economy is on the United States. The dependence can trump almost any data. Today's rally has truly altered the technical picture for the dollar against a number of its counterparts. The euro dollar today looks capable of testing 160 as early as next week if it closes anywhere near 157.50 today. The pair is still battling a bearish trend line on the daily chart, but the last 48 hours will be difficult to undo right away. The dollar Swiss fell as the euro rallied, and the pair is now trading under a bullish trend line that has supported prices since it bottomed out in March. Support in the 102 area is now critical in maintaining a bullish tone. The pound dollar gained big today, adding 125 pips to its slightly positive close yesterday. The bounce comes on the back of heavy selling in the first 3 days of this week, keeping the pair's erratic theme intact. Moving on to commodity currencies, we did not see the strength we should have from the group given the big run-up in oil and gold prices. The Aussie dollar still managed to get back above 96, but a near $10 gain in crude oil could have been the perfect excuse for a new 25-year high. Now to the big picture. The definition of recession is becoming less important as more Americans feel like we are in the middle of one. The unemployment rate rose by the most in 20 years last month, consumer confidence is at a 28-year low, and gas costs an arm and a leg. So whether or not we will see 2 consecutive quarters of contraction is now a mere technicality. Of course, the U.S. has plenty of company in its struggles. Almost all G7 nations are showing signs that a serious slowdown is either underway or just around the corner, and that's what matters when it comes to exchange rates. The greenback is already at extreme lows against most of its counterparts, so the risk really lies in the other currencies. This is why we have seen the buck rebound a bit recently. However, when ECB President Trichet tells the markets he might raise rates next month, there isn't much we can do to keep the dollar from falling against the euro. The immediate reaction is to buy euro dollar. On the other hand, in the bigger picture, we know that higher rates will ultimately send the eurozone into a recession, and that isn't going to bode well for the currency sitting at all-time highs. So as we move forward, we must keep in mind all angles. In the immediate term, early next week, selling the USD may be the path of least resistance, and we are not going to fight it. However, this cannot continue indefinitely, or probably even for the rest of the year, as the global economy finds itself hurting in the wake of the U.S. slowdown. The dollar's big picture decline should be at or near a real bottom soon. Till next week, have a great weekend. Take care.